That was a view coming in from Pankaj Murarka. Let's now go across to Pankaj Pandey, Head Researcher, ICICI Direct.com. So what do you make of the overall earnings so far, Pankaj? What is the sense that you get on an overall basis? We have a sufficient number of 20-25 companies declaring numbers so far from the larger space.
I think the overall numbers as of now are looking sort of fine to us. So IT numbers largely, while there is a sort of a overall dip in the margins, what you see from most of the players, or the margins are expected to dip next quarter because of the wage hikes and the travel costs. But the outlook for FY23 remains intact for most of the companies, if not better. So from that perspective, IT overall has been sort of a decent set of numbers. I think Reliance within oil and gas pack was a bit of a disappointment, given the fact that GRMs were lower. And in fact, when you sort of look at yesterday's number for Chennai Petroleum, I think their GRMs are better than what Reliance would have clocked. So Reliance was a sort of a disappointment. I think banking entire set of numbers have been sort of good according to us. There has been a sequential improvement in NIMs. I think the credit growth has picked up largely again driven by retail, and in retail you have segments like home loan, you have segments like credit cards, personal loan, which has sort of done well for Axis Bank, Kotak Bank, ICICI Bank. So banking and IT numbers have been sort of steady. Banking has been a lot more better. So up till now, overall numbers are quite steady. We'll have to see how the sort of rest of the result season pans out, but really do not expect too much of a dip in terms of earnings or in our Nifty EPS estimates up till now. But yes, we are still in the midst of a result season, so let's see how the rest of the season pans out.
Any numbers that you particularly liked, which from the recent names, the likes of Tata Steel, Axis, ICICI, probably if you can comment on ICICI, but any of the other names that you liked in the last 4-5 days? We've had some good 7-8 companies declaring numbers.
So Axis Bank numbers, according to us, is good. There is a sequential improvement of about 111 odd bips in the NIMs. While yes, there has been treasury losses both with Kotak Bank and even with Axis Bank, but asset quality concerns. So you look at GNPAs and NPAs sort of declining. So Axis Bank numbers, according to us, is sort of quite good. Tata Steel numbers, I think what is surprising is that the European EBITDA per ton is come higher than what the domestic operations are. So that's a sort of a highlight. But we have to see in terms of con call whether these numbers are sustainable, which we doubt. But in case if it is sustainable, yes, the numbers are good. IT numbers, when we look at Sonata Software, the international IT services has grown at a pretty healthy pace. Even the Tech Mahindra numbers, while are sort of okay, but if the company is guiding for a margin recovery from second quarter, I think that is also sort of looking good to us. Supreme numbers were also good, while definitely there is a pressure on the margins, but when you sort of look at the piping segment, which has been the anchor driver of the growth, last 3 years, it's growing at 17-18 odd %, and that is what the guidance has been given by the company, and with recovery in the margin in the latter half of the year. So that way, I think numbers are looking okay to us. Yes, there is a margin pressure, but I think that is more of a sort of a sequential challenge is what you will see every quarter for some of the companies.
Okay. I've just started the show. There was a slight technical glitch. Kunal, what I would like to do is, and I'm going through some of the top gaining stocks as well, right? Yesterday for chemicals and specialty chemical stocks, what a day it turned out to be. Whether you look at a SRF or you look at a Naveen Fluorochem as well. What's going on in that space?
So I think the specialty chemical space overall has been doing exceptionally well. And I'm talking of it more from a longer term play. SRF, I think, has been going just about significantly better quarter after quarter. I think this is the first time where the stock over the last 2 quarters, previous 2 quarters, had actually gone into a correction. But other than that, I think it had almost a 10 or a 9 straight quarter uptrend for itself. So it doesn't come as a surprise that after a 2-month or 2-quarter break, the stock has managed to start to do pretty well for itself. And it's a stock which traditionally goes into a strong buy on dips candidate, and specifically a 10 to 15% drop on an average is a good zone to start nippling into the stock. And even for other names like Navin Fluorine, etc., I think these stocks are now back on the verge of breaking out of their previous major resistances for itself. Navin Fluorine coming back to 4,000, 4,200 levels, breaking past about series of resistances, the 200 DMAs, the price-wise resistance, etc. So I think that's a very strong and a healthy sign. And I think the overall pack, the overall chemicals pack as well, has been doing pretty well for itself over the near term. The recovery in the last 1 month has been above par or above the average as compared to the other sectors.
What does one do with Adani Enterprises, Kunal? Once again, 52-week high. Even BL for that matter.
Buy and hold, I think, would be a better advice for stocks like Adani Enterprise. These stocks are not typically getting into a very sharp correction zone for themselves. So, for example, BEL over the last 2.5 odd years had not even broken below its 200-day moving average once decisively, and whenever the stock had managed to come back towards its 200 DMA, that was a point where actually the stock managed to revert to its mean and then come back and then start a fresh uptrend for itself. So the risk reward was very, very positive for BEL at those key support points for itself. But then these stocks, they have a tendency of getting into a sidewise correction. So one has to look out for those entry points. So for example, someone who's missed out, for them, I think a better entry point is when the stocks actually go into a very tight kind of a consolidation where the stocks remain into a range probably for 4-5 days. There's no major of a price activity into these stocks. That could be better time to try and enter the stocks. But then again, looking at the chart prospects for Adani Enterprise as well, the stock breaking past about 2,000, 2,500 levels and all of those barriers for itself, I think is a very healthy sign that the stock uptrend would continue for at least over the near term.
Okay.
Right.
So that's the take coming in on a couple of counters. But Pankaj, wanted your take regarding a couple of these retail stocks as well. Overnight, we got the news from US that Walmart has cut their guidance. They are saying that inflation is impacting the numbers, and that's something which was visible in the stock price, which plunged by around 8 to 10% as well. Back home, the likes of Shoppers Stop, etc. will be reporting their numbers today. And Trent has been one stock which has been on a tear. What do you make of the entire retail space, and is there any specific stock that you like from that sector?
So retail is one space which we like a lot, not only from an exporter perspective, but even from a domestic perspective. Now, when you sort of look at Shoppers Stop, their margins have been sort of lower, largely because you have been sort of selling more of branded stuff. Now they are sort of expanding their own label, and that will sort of fetch better margins. So structurally, we are quite positive on Shoppers Stop. Overall recovery in the retail as a segment has been a lot more better. So that is why we like the entire space, be it Trent, be it Titan, or even smaller textile companies like CRM Silk Mills or Cable Kiran for that matter. I think the numbers have been sort of coming out good for all of these companies. I think on the exporter side, if US is facing, or companies like Walmart or Amazon might face challenges there, and what we have done is that something like Indocount might get impacted, which is into the bedding side which sells bedding sheets. So that is one segment which could get impacted. But when we sort of look at something like KPR Mills, overall, or Gokuldas Exports, largely our sense is that the apparel as a segment may not that get impacted. So from that perspective, one needs to sort of differentiate. But retail is one space. I think the overall space addition across players is going to be a lot more higher than what they have done in the last 3 years. So we like the entire space with the names which I just mentioned.
I'm just going to go back to the Adani Group names, and Anisha was just highlighting and talking about the Adani Group of stocks. It's quite surprising to see that Adani Ports and Enterprises are relatively the underperformer in the Adani pack. Year to date, your maximum returns have come in from Wilmar, of course, no prizes for guessing that, which has given you a return of 132%. But it's actually Adani Power, which is at the top of the list with a 192% gain, as surprising as it may be, Anisha. And then, of course, it's Adani Transmission, Adani Total Gas, Adani Green Energy, and then is Enterprises, and Ports has actually given you a meager less than 3% year-to-date return. So I mean, talk about the kind of jugglery that you're having even within the Adani group of names.
Oh, well, yes, and as you said, it's surprising, especially because ports is the cash cow for the entire sector, right? And power gets
And
its money.
enterprises gets that very holdco kind of,
And the incubator
valuation.
of the new companies and
Exactly.
the new phrase. And now even the new energy business and the green hydrogen business is likely to be housed in enterprises. So
Yeah.
yes, very surprising moves. Maybe they had the run-up earlier itself, not
Which they
really sure.
didn't, yeah.
But yeah, Adani Power is a bit surprising because nothing seems to be changing for them except that a couple of rulings have gone positively. But we'll keep discussing those with our analysts and guests as well, because specifically today we of course have the AGMs of Adani Enterprises, Adani Ports, etc. And we'll have Mr. Gautam Adani speaking at around 10:15 as well. So we'll keep getting you more updates from that particular address as well. But Pankaj, coming to you, I know we have touched upon this already, but any of the Adani Group stocks that you like?
So we only track Adani ports, and so in fact we like the entire logistics as a space, because if manufacturing in India has to sort of go up, given the government has been sort of looking to incentivize number of segments. So Adani port obviously is a lot more attractively placed. Besides that, we like Concor, we like PCI Express, so we like the entire lot. But the rest of the Adani Group companies we don't really track, largely because our sense is that the price discovery is still there, sort of a challenge. So which is we really do not have a view on the rest of the Adani Group. But I think Adani Ports is looking quite attractive to us. Given the kind of plans what they have made in the entire logistics side. So I think that is the one stock which we have been liking for quite some time.
Okay, that's Pankaj Pandey's views when it comes to the Adani group of stocks and the returns that shareholders have been getting in the last 1 year as well. Before we go any further, you just heard Pankaj talk about logistics space. Let's stay with that. Here's Girik Capital's views coming in on the back.
Absolutely. If you look at the P multiples, they look elevated. But I think, one have to go beyond the P multiples here, both in ABB and Blue Dart. I don't want to go to the specifics of it, but I think the general thesis in, let's say like an ABB, which is capital goods, we've not seen a cycle, the capex cycle for such a long time. So, there's been a clear shift of, capex cycle coming back. So I think we like that theme. Of course, ABB being a leader, we've backed it. But I think the broader theme is that, we feel that the capex cycle is coming back. Industrials and capital goods stocks may do well. So I think the point of ABB and Hitachi being in our portfolio, I think it's really the capex theme. On the other hand, Blue Dart, it's more of a company specific play. We've seen in the last many years, because of many of the online guys and companies like Delivery and even other delivery guys have really taken the pricing down substantially for many of these players. But I think what's happening in the whole logistics sector is that the pricing is coming back, and which is very interesting for a company and a leader like Blue Dart.
Okay, so that's the take coming in on a couple of these logistics players, etc. as well. But the entire capex team seems to be working quite well, right? And Aisha, we've seen ABB, Siemens gain quite a bit. And not only that, ancillaries have been doing well as well, the likes of Schaeffler, Timken, etc. And today, of course, Big Boy L&T will be out, and that will be the most important to track.
Very critical, and especially considering that Kunal has been pointing out the reading on the charts and how L&T is really the one to bet big on within the cap goods space now. Also because, I mean, from a technical perspective, L&T has been a bit of a non-performer, so he feels that L&T could sure play catch-up. But a lot, of course, is going to depend, I guess, on the earnings today. We are expecting healthy growth in the first quarter because of a very large large and sizable order book, weak base also, so which is why optically the numbers may look a lot better than what they are. Healthy infrastructure pipeline, limited impact on the margins despite high commodity costs because of, higher share of orders that they have incurred with price variation clause as well that they adjusted for all through the COVID times. And yes, international order wins, which are going to support the domestic market share loss as well. What's going to be critical, of course, is always the commentary from L&T, because that in a way gives you a sense of not just where L&T is headed, but also their view on the economy, on, considering the kind of multiplier effect a large conglomerate like L&T has. So their margin outlook, order inflow, execution, all of that is something that we're going to look out for. If Kunal is mic'd up, and if I could go across to him. Kunal, are you mic'd up? Yeah, you are. Kunal, you've been talking about as to how now the case is stronger for L&T to play catch up to the likes of your ABB, BEL and what have you. Let's revisit that, because today you've got L&T's earnings, and L&T is extremely volatile and sensitive to its earnings. What do you read on the charts now?
Well, yes, Aisha. So historically, L&T, the swings for it. So we were discussing this point for Reliance that 3% is the odd swing for Reliance post results. For L&T, that number swells up to almost 7%, 6.5% for itself. So we've seen many a times the stock to try and swing past maybe 6% to 6.5%, post results on the upside and the downside, of course, depending on the results, etc. But my sense is that the markets are now going in with a very bullish kind of an approach for L&T, at least this time around. The stock has recovered quite well, almost a 10% plus recovery for a stock like L&T. Yes, it's underperformed, and there's a lot to catch up. But if results and the reaction post results are something on the positive side, then I believe that it could act as a catalyst for L&T to try and speed up the up move and then probably try and play a strong catch up with the other peers. So would maintain the bullish stance, and assuming if the stock doesn't react too much on the negative side, and if it scales past about the 1800 mark, I think that could probably act as a strong catalyst, and the underperformance could probably be covered up pretty soon.
And Pankaj, we have Asian Paints also that will be reporting its numbers today. The street is expecting a very strong volume growth of 18%, but this entire sector has become very heated with a lot of new companies, the likes of JSW and now Grasim as well, doubling down on their investments when it comes to the paint sector. Which are the top companies that you would like to bet on? Do you think the likes of Asian Paints can continue gaining market share, or that will come under threat when these new competition come into the picture as well?
I think when you sort of look at the overall setup from new companies which are sort of slated to come up, I think Asian Paints has been sort of gaining market share, whereas Kansai Nerolac and Berger Paint to some extent has been sort of losing market share. For Asian Paints, we expect about 31% kind of a revenue growth on a YOY basis. But if you sort of normalize on a 3-year basis, it's a sort of a pretty normal growth of about 13%. And largely driven by realization, volume growth is expected in single digits. Now, the company has taken up further price hike of about 3%, so that might sort of help in terms of maintaining or a bit lower dip in the gross margins. But I think Asian Paints, among all the players, look a lot more better in terms of defending the market share and maintaining the kind of growth rate what the sector can do. And our sense is that over the next 2-3 years, probably the volume growth could pick up because when we see the kind of launches on the real estate, once these projects start to sort of get delivered, we feel that the demand for ancillary products like paint, switches, wires, I think should go up. So probably there are better days ahead for Asian Paints going forward.
Right. So a lot of stocks to watch, a lot of results expectation as well. Kunal, just in terms of FMCG, I mean, removing Asian Paints because it moves it on a different pace. Do you think names like HUL, some of the others, have actually given a decent bottom? Because in the full COVID phase, they actually did not do anything.
And ITC, you're forgetting that one, which is now past the 300 mark.
Yeah, but that was not a favorite, so it's now become a favorite. Also. But HUL was always overowned by FIs and things. So how do you see some of the likes of HUL, GCPL, the sort of move that they have seen, especially in the last 3 months?
So a formidable bottom is definitely in place for these stocks. Now, this is more from a medium-term kind of a play or longer-term kind of a play, where HUL managed to bottom out closer to that 2,000, 2,100 mark for itself. And similar levels in terms of price was seen in the other names. So I think Dabur, Marico, many of these stocks, they managed to form a formidable bottom for themselves. Even Godrej Consumers, which apparently was a big underperformer for most of the time, I think in this FMCG correction, also has tried to play a good catch-up for itself, coming back about that 800 mark. And of course, ITC is also no exception. The stock perched above the 300 levels, and I believe that it looks quite strong for even higher returns from current levels, possibly a 330, 350 over the next 3 to 6 months could not be ruled out for a stock like ITC. But then my sense is from a very short-term play that these FMCG stocks have also run up quite steep and hard in the last 1 month. Almost a 20%, 21% rise on a stock like HUL, and then similar rise which we've seen in the likes of Britannia, Nestle. That generally indicates that these stocks would get into a time-wise correction. So I think a better timing-wise opportunity would be to try and wait out for this consolidation to get over, possibly over the next 2 to 3 weeks. That could be a better time to try and trade these stocks and then look to buy these stocks. But yes, the near-term, the medium-term charts indicates that a formidable bottom has been in place for these FMCG names.
Okay, we're just discussing, is the party over for FMCG, because we've been seeing a nice leadership churn as well on the Lal Street. And what we now will talk about is Zomato, not just because it's breakfast time, but because you've also seen that 6-month lock-in end. We were discussing this stock on top of the show, plunging nearly 11%. If you look at it year to date, from a high of 140 rupees a share, this new age company is now available for less than 50 rupees a share. And you've got global brokerage firm Jefferies coming up with a target of 100 rupees. What exactly is Jefferies saying? Let's go across to Vinny for that. Vinny, this share is available now for less than a 50. The markets gave a big thumbs down to the acquisition of Blinkit. The 6-month lock-in period has been lifted. We saw what happened last night to the price. So Jefferies still a long-term believer?
Absolutely, they are quite convicted on the stock. They are reiterating their buy rating on the stock. And an interesting line that they've given, that the night is the darkest just before the dawn. So it seems like they are quite positive on the stock. Yes, they are highlighting that Zomato has underperformed in terms of the stock coming in as well. But what they say is, given that the Fed tightening policy, investors are focusing now more on cash flows coming in as well. All the food tech companies have globally faced a bit of a pressure, and Zomato in the last 1 to 3 months has underperformed. But in the last 6 months, 1 year, when you look at it, it's a similar way that Zomato has been performing with its global peers in terms of the stock performance. So that is a trend that we've seen globally coming in. Now, why are they seeing a good conviction coming in? Is that one, they believe that the company tough times have changed, given the focus that the company has been making on cash conservation as well, cash flows as well for startups especially. And Zomato's management has actually accelerated their journey towards a better unit economics. They're focusing on that as well. They're eyeing on the break even coming in as well. And what Jefferies believe is that we could seeing lower EBITDA losses coming in. EBITDA will start performing better. Every quarter we will see an improvement coming in on that front, is what Jefferies is highlighting. In terms of competition as well, is what they're highlighting is that now seems like the worst is over in terms of competition coming in, and industry profit pool will now concern coming in over there. But other than that, they expect strong momentum coming in the monthly transacting units for Zomato, as well as they are building a 25% monthly transacting CAGR over 22 to 26. So keeping an eye out on Zomato, they are retaining in a buy and a target price of 100 rupees per share.
Vinny, thank you so much for bringing us those details. Let's watch out which side does Zomato head today after that 12% plunge that we saw on the counter yesterday. But time now for our News Fatafat segment. Russian energy giant Gazprom has said that it plans to reduce gas supplies through the Nord Stream 1 pipeline to Germany to just 20% capacity later this week. The pipeline resumed pumping just last week after a 10-day maintenance break. But the European Commission has warned that a complete gas shutdown by Russia is likely. Beijing has criticized Rishi Sunak for his remarks about his tough China policy pledge. Rishi Sunak labelled China as the #1 threat to the UK and global security and vowed to reduce the influence of Chinese in Britain if elected as Prime Minister. He also criticized China for its statement and treatment of minorities and activists in Hong Kong.
Well, the Chinese population is expected to begin shrinking by 2025. This is according to research by state-backed media Global Times. Birth data shows that the number of new births in 2021 is actually the lowest ever. Meantime, back home, aviation regulator DGCA has conducted 53 spot checks on 48 SpiceJet aircraft between July 9 to July 13 and did not find any major safety violations. Minister of Civil Aviation for State V. Singh said that SpiceJet planes were involved in at least 8 technical malfunction incidents in the 18-day period starting June 19th, following which the DGCA had, on July 6th, remember, issued a show-cause notice also to the airline.
Meantime, several states ramped up screening and surveillance for monkeypox cases, with 4 cases of the viral zoonotic disease reported across the country so far. The WHO has declared the outbreak a global emergency, while India reported 4 cases, 3 are from Kerala, and the latest case came in from Delhi. The Central Bureau of Investigation has arrested 4 people for allegedly attempting to dupe certain people by offering them seats in Rajya Sabha for 100 crore rupees. Besides Rajya Sabha, they also offered the post of governorship and chairmanship of various government organizations in lieu of bribes.
Well, it's that time of the show where we also get you top ideas from our chartists as far as the broader markets are concerned. Naresh, coming to you first, what stock-specific ideas have you brought for our viewers?
So that would be a buy on GMR Infra with a stop loss at 35 and a target price of 40. The stock is on verge of a triangle breakout above the 36-50 mark. Over the last 1 month, it has been in a tight range. It's given a small breakout above the 35-60 mark on a monthly basis, but it would be a much bigger triangle breakout above the 36.50 mark. Expecting it to take leadership in the short term and make a dash towards 40 plus.
And Kunal, what about you?
So it'll be a buy on Century Ply. That stock looking quite attractive on the short-term charts. I think it's also on the verge of a breakout of its 200 DMA. So would suggest a buy with 620 as a immediate target. Stop loss at 584.
All right, these are some of the ideas just as we see pre-open. In the pre-open, Nifty is absolutely flat, just about 1 point plus or minus, but there seems to be a lot of reaction on results. And at 9:15, I'm sure there'll be a lot of volumes on some of these large names that we have discussed, whether it's Axis Bank, Tata Steel, TechM, second day in a row for RIL plus the upgrade. Bajaj Finserv as of now is up 9%, but I think it's just 2 minutes into a pre-open, so it'll probably settle. There is some news flow over there, which we have highlighted earlier as well. 10% higher for that name. It's an interesting one as well. So Kunal, just wanted to get your perspective. I mean, it's a stock split bonus sort of a news flow for Bajaj Finserv. For charts, except for volumes going up because the share price will come down and volumes would become multifold, what essentially changes?
I think changes a lot because then it will probably become more actively traded, because, you know, a stock with 13,000 and 14,000 denomination is generally not liked by, or not, I would not say not liked, but then it's generally not preferred by many traders, individual traders specifically. So I think that could be the biggest advantage for this special situation.
All right.
But I wonder why, you know, even for the retail janta, they'd much rather go for a double-digit stock than, I mean, it's the same logic, right?
Yeah, I mean,
but
you invest 13,000, you invest 13,000, whether 1 share or 10 shares.
Yeah.
But yeah, it's always interesting, markets like
but
it.
It's this
psychology, I think.
It's the notion which these guys have, assuming that you can buy a higher quantity. So for them, quantity is very important.
But generally, we have seen market sentiments for bigger companies tend to improve after bonus or split.
Yes.
Okay, so that may be the case. And as Kunal pointed out, this is a 13,000 rupee stock, and maybe sentiments and volume improvement or active trading or not active trading may actually be on the higher side. Pankaj Pandey is also with us. Pankaj, you know, some of the when we just talk about insurance companies, the monthly data has been good. So whether it's a iPro, whether it's a HDFC Life, some of the names, but somehow whenever we talk about top gainers, top movers, they don't end up into that list. What is the reason for that insurance space?
So I think when you sort of look at last 2 years, there's been sort of a slower kind of a growth, and when you sort of look at from a forward perspective, say protection, which is the highest margin segment, the premiums have gone up, and which is why the sort of growth has sort of come down. And I think there are some segments where we are sort of seeing a recovery, something like motor insurance. But in general, since the premiums have gone up, so there are only few pockets which are sort of doing well. So home protection products is something which has been doing well because we know that the housing sales have gone up, and which is why the home loan portfolio for most of the banks have been sort of doing well. So, and then you have LIC also being there. So obviously you have more number of companies eyeing for a similar kind of allocation. So which is where the challenge is that. And sum total, I think SBI Life is the only company which is being sort of an outlier compared to the rest of the pack. So they've been sort of growing very well. And I think largely because of the fact that the penetration in SBI branches for them is relatively less. So as and when they increase the penetration for them, the growth rates are superlative compared to the rest of the pack. And I think ULIP also as a segment has been soft given the fact that there has been softness in the market. So there are some pockets or segments which are sort of slow moving, and that is impacting the performance of life insurance as well as general insurance companies.
Right. Okay, that's the take coming in on what the insurance plays are up to in the market. But you know what? Let's get you some cover as well. And Sun Pharma's, one of its key drugs, has posted a very good set of sales numbers in the EU region. And now Morgan Stanley is maintaining its bullish stance on the pharma company as well. So let me take it across to Sharad, find out what is the buzz on Sun Pharma, Sharad.
Well, the focus is on Sun Pharma, and the stock itself is up more than 9% since June lows itself. Now, the news is that Ilumetri's sales trajectory in the European Union has remained strong sequentially. Now, Sun has actually outlicensed this product to Almirall for the European region itself, and the numbers have been aided by the new country launches which was seen in the European region itself. Now, Ilumetri's European Union net sales were up almost 31 million euros, up almost 15% sequential basis and 55% on a year-on-year basis. And even the sales from Germany represented overall 50% of the total sales itself. So kind of a strong set of numbers coming in, giving a positive impact for Sun Pharma itself. And Morgan Stanley has also come out with its rating, maintaining an overweight status on it and a target price of 1,000 rupees and 32 rupees per share. And even apart from that, even LIC announced that it has reduced its stake in the company from 7% to 5% in yesterday's post-market hour session.
Okay, we have got the pre-open rates, and it does look like it's better than what the street was expecting, because the SGX Nifty is likely to open with the Nifty is likely to open with just a flat tinge, just around the 16,630 mark. So good time then to get the index call going with our technical experts. Well, there seems to be a buy coming in from Kunal for the Nifty call this morning. However, Naresh and Kush are a tad bit more tempered. They advise that perhaps one should hold the Nifty, and that is ahead of the important events which are lined up. We have the Fed meeting which will start later tonight, and of course it's the expiry week as well, and that is going to play on the minds of traders as well. So it's a consensus hold coming in from the traders. As well as the Bank Nifty is concerned, similar picture shaping up. So Kunal is still bullish. He maintains a buy, but Naresh and Kush believe that perhaps one should hold on to their investments and not make any fresh bets on either side. So that's the word coming in. Again, a consensus hold as far as Bank Nifty is concerned. Okay, Pankaj, let's come back to you and talk to you about what's happening with the IT space. We have seen the earnings so far, but a trend which is actually emerging is that mid-cap IT has continued to fare better than large-cap IT, both in terms of revenue growth as well as margin profile. But given the fact that these stocks still trade at much more expensive valuation than the large-cap IT, do you expect some sort of reversal and the spreads to narrow, or do you think this outperformance of the mid-cap IT space is likely to continue?
I think overall, IT as a space probably could do well, say 2 quarters down the line. By then, we will have clarity in terms of how FY24 probably could pan out, or the kind of damage what US Fed rate hike could do to their economy. So from that perspective, IT can sort of probably start doing well 2 quarters down the line. And I think in general, when you sort of look at between tier 1 and tier 2 names, definitely you look at tier 2 names have been sort of doing very well. So you have something like Coforge, which has been sort of growing at more than 5% for a good 5-6 quarters. persistent high 9% kind of a growth, including inorganic for about 5-6 quarters. And so that way, given the fact that some of these tier 2 names have been sort of growing at a higher rate, and our sense is that they'll continue to command some kind of a premium multiple. And within tier 1 names, you have some companies like Wipro where the growth is sort of quite patchy. So which is why it is commanding the lowest kind of a multiple, and same is the case with ICICI Direct. So I think from largely the differentiation will be basis growth rather than sort of a tiering of a particular IT company. So if tier 2 companies continue to deliver high set of numbers, we've been giving higher multiples to them, and which is why Persistent, Cyient, and Coforge have been so these companies we have come up with a buy post results.
Pankaj, I couldn't help but notice one stock that was conspicuous by its absence, often called the dark horse of the IT pack. We know the earnings also. Tech Mahindra.
So Tech Mahindra, largely the numbers were fine, but when you sort of look at margins, margins are quite lower compared to a lot of players. And then, so while there is an expectation that the communication as a vertical could pick up, which is the biggest segment, because you are expecting 5G launches happen, and as a result of that, you'll see tech spending sort of going up. So I think benefit of doubt is still not sort of given to the company as of now. Number-wise, we still need to see whether that sort of percolates into higher orders and higher, better growth rate. So till that time, I think it is very difficult to give a relative benefit of doubt to Tech Mahindra, and which is why there has been a significant underperformance from this company.
Okay. That's the take coming in on Tech Mahindra. Pankaj Pandey, we let you go on that note. Good to have you on the show as always. Just counting down to the market open then this Tuesday morning. And after what turned out to be a volatile day of trade yesterday, we managed to cling on to 16,600. And looking at the pre-open as well as the SGX Nifty, it seems like that's exactly how we're going to be on course today as well. At 16,600, that's what the Nifty pre-open rates are indicating. Having said that, yesterday there were a lot of moving parts, earnings reactions, disappointments more than positive surprises that really were at play. Tata Steel, Innocent Bank, Hindalco, Asian Paints ahead of its numbers on one hand, and some of the IT plays, but on the other, a big drag coming in on Reliance, big drag coming in on ICICI Bank. Well, it may have closed flat, but it gave up that 1.5% gap up that it started off the day with. Today, of course, you've got L&T, you've got Asian Paints, you've got Bajaj Auto also declaring their numbers. And then, of course, we're going to start off with reacting to Tata Steel's earnings as well. And Axis Bank, that's going to be top on our radar. In fact, I want to see what Axis Bank is up to in the pre-open rates, because there could be some disappointment. It sure was a mixed bag, but I'm curious to see how the street is going to absorb that number, down about almost 0.6%. 722 is where Axis Bank seems to have kick-started. Kunal, considering that we've got so many earnings lined up, it's going to be a little difficult to see where leadership is going to come in from. What is your own sense? Within the Nifty, are there any three names where you think that, these are going to support the index?
Well, so off late over the last 2-3 days, we've seen HDFC Bank doing pretty well for themselves. So they've been more silent performers, at least till the previous maybe 2-3 weeks of this market rally. But somehow over the last 2 days, there has been good breakouts which have been visible for HDFC and HDFC Bank. HDFC specifically crossing back, I think, about the 2,290, 2,300 levels. HDFC Bank coming closer to that 1,400 mark for itself. So these are very important and crucial resistances for the stock. And I think the last 2-3 days, we've just seen the speed of rise, the velocity of price rise being a bit more higher for these names. So that could probably be an indication that maybe the beta is getting shifted towards these large cap names which could try and outperform. Ultratech Cement post the results reaction last week, I think is also one of the fresh candidates for a strong move on the upside. So my sense is that even if the banking stocks, or maybe a couple of them, they remain to be tepid performers, you have other names which are actually trying to play a good support or a helping hand for the markets.
Okay, Naresh, wanted to get a chart check going for a couple of these names that were getting quite excited yesterday. Indian Hotels was inching hard towards the last hour of the trading session, and Delta Corp as well. Can they resume the up move today?
So Indian Hotels structurally a strong uptrend. It should see a fresh move once it can sustain above the 269, 270 mark, which is the recent 52-week high. And overall, the trend is still strong, so it's a buy at current levels as well as on dips. So I would expect it to continue slow and steady, but momentum could see a sharp uptick above 270. Delta Corp, on the other hand, is more interesting because the stock yesterday gave a range breakout on a small time frame on a hourly basis, wherein the stock has sustained above the highs of the last 10-15 trading sessions. But a bigger momentum comes into the stock above that 191 mark, which is the high for the last 2 months. But overall, a stop loss below 175, and the stock looks interesting for a trade.
Okay, getting set then for the market open, and we should be ringing the bell any second now. Seems like it's going to be a 16,600 start, and flattish a move is what it seems like the first print is going to be. So there you go, 16,623. It is a flat start for us. The Nifty Bank is, well, a little bit tempered. The first flash indicates that at least the breath is holding out in the positive, but disappointment like an Axis Bank. It started off down by about almost 1.5%. Next up, I want to see what Tata Steel is up to, considering the Q1 PAT has managed to beat the estimates. The revenue margins are both above the estimates. 0.5% higher is where Tata Steel is in trade. And of course, later around noontime is when you can hear it out from the Tata Steel management right here on your channel. Tech Mahindra, they've managed to beat the estimates, although margins have been a disappointment. Constant currency revenue growth has come in at 3.5%. Tech Mahindra starts off in the green, almost a 2% climb up is what you're seeing on that stock. Not done here. You've got a whole host of other earnings which are slated to come out today. So Bajaj Auto, Asian Paints, L&T, all of them slated to come out with their numbers, and all of that is going to be important. In fact, not just earnings, you know, Bajaj Finserv, the board is going to be mulling a bonus issue and a share split. So look out for what you see on the stock, and mighty amount of action. It's already at 13,000 stock now. 3% higher is where Bajaj Finserv is. Also strong earnings coming in from a Sonata Software, from a Craftsman, from a Macrotech Developers. We're going to be shortly chatting with Abhishek Lodha from Macrotech Developers as well, and get in a sense of where things are headed from here for them. Macrotech, although started off flat right now. Weak earnings then for a Tanla Solutions, for a Tejas Network, Tattva Chintan, you know, some of these small ones. I want to see what Zomato is up to, considering it got shrunk all the way to that 47 rupee per share mark. Are you seeing consistent weakness? Yes, you are. It's now even breached that 45 rupee per share mark, and it's in excess of 5% the cut on Zomato as we speak right now. What is Reliance then up to? Got a fair amount of thrashing after its earnings yesterday, but this morning, for instance, UBS has upgraded it to a buy from the earlier neutral. They've also raised their price target all the way to 31.50 from the earlier 2900. But no excitement in Reliance. It's just about defending that 2400 rupee per share mark. 5G auctions also today, although it's going to be a longer process. It's not like an IPL auction in that sense. But yeah, some of these telco stocks are a little bit tempered in trade. But for the index, it's quiet. We're testing 16,600. But Kunal, you know, like we were discussing earlier, a lot of moving parts, a lot of earnings reactions. So, I mean, till we hold 16,500, which I guess we should, we're okay, right?
Yeah, I think we should be okay till the time we hold 16,500. But if we break that, then I believe that there could probably lead to more of a aggressive correction on the indices back again. So I think that's the most important level to watch out for from an index perspective. A couple of names which I believe looking attractive on the short-term charts. One of them, of course, is Coal India, which I flagged off in the morning. I think looks attractive to me on the charts and is also heading towards a classical multi-month breakout for itself above the 200 levels. The other name is Delta Corp, which interestingly is now seems to be forming a good base at the 170-75 zone for itself. It's now crossed the 180-85 mark for itself. So I think Delta Corp could be an interesting play. Short-term wise, we could look at possibly another 7-8 rupees pop on the upside. So 195, 196 could be an immediate target for Delta Corp.
Okay, so that's Delta Corp, which is of course on Kunal's radar. Naresh, coming to you. After first trade, tell us what's caught your attention. What's the trade for you right now?
That would be a buy on GMR Infra. The stock is trying to make a breakout move. Sort here would be a buyer at current levels with a stop loss at 35.20 and look towards a breakout move in the short term.
Right, Nuresh, thanks so much for that. Hope to see you again. And thank you so much for taking out time for us. Let's welcome in our first guest now on the show. Special guest needs no introduction in the world of financial market. Nilesh Shah, MD of Kotak AMC, is now with us. Nilesh bhai, thank you so much for taking out time for